Three things in life are certain: death, taxes, and Bitcoin's volatility, guys. We are looking at range breakdown. Is it happening out of nowhere? To be honest, not, guys. It's not happening like that. We kind of expected this to happen, although we did not expect this to happen literally before this weekly candle closed for the CMEs itself, right? Let's talk about the open interest coming from the professional exchange right here, guys. You can see that the light blue color represents the open interest coming from CMEs, right? And you can see, guys, that the price action shook down. The open interest also started getting down. And well, the retail exchanges also had a similar follow through on the open interest itself. How can we interpret this data right here? The professionals and the retail crowd, both of the people sold, guys. Let's just say, guys, this is not really a nice news, because every single time when the price action rises to the upside, this little drop in the price action does not mean anything until the open interest stays to the upside. Right here you can see, guys, this entire trend was simply bullish, right? We had a crazy bullish leg in the open interest. The price action was crazy volatile, but the overall trend was simply being carried on forwards to the upside. And if we talk about this piece of price action that happened yesterday, and which has been happening for the previous 2 months, we can see that the price action goes down and the open interest also goes down, guys. Every single time we have been looking at this, the price action went down from $50,000 and the open interest also got down massively. And it all started with $65,000 top, $65,000 market top. The price action went down and the open interest went down with the price action itself, guys. And the crazy dump that happened from 58,000 that took the price action towards your 47,000 regions was also similar situation, guys. So the overall picture on the bigger time frame is still bearish. We were not able to take out some key levels to the upside. That is something we will talk about in the technical analysis side of this video as well. The professional thing to be done right here in these landscapes is just to wait for the Monday's candle open, guys. A lot of things are happening in equities market as well. What happens in equity markets is something that happens in crypto markets as well, guys. I don't think that there is any other thing which is going on right here, although we do have comparisons on dollar index altogether with Bitcoin. But dollar index is a complete different thing. It's not related to equities as a whole, right? What is happening in SPY and NASDAQ and even in our indices in India as a whole? So you're looking at an overall sell-off in the equities markets that is being reflected on crypto assets as well altogether, guys. These markets, these highly liquid markets, they do move together. This is the case, guys. This is something which happens, right? Now let's talk about what we were going through on the previous video. The total overall long and short ratios coming from all of these retail exchanges right here. Now what we can see is that it's pretty much normalized. We had a crazy imbalance between the longs and the shorts in the market, where the longs were simply overtaking the percentage of shorts in the market, guys. We had a little imbalance in the retail exchanges as a whole. So a lot of people from the retail exchanges were over bullish in the market. We had that correction that simply followed up in the price action, guys. That is the scenario which I was not looking forward to, kind of played out. So yes, it's kind of disappointing for me as well, guys. I got to talk about one more thing as well. So there's a quant strategy that I'm simply running in the market, right? And that is the small time frame strategy that I play for myself. Whenever the market gets into a range bound situation, I let that strategy run, and it actually kind of performs very, very nicely, guys. It has a good hit rate. It's above 75% as of now. You believe it or not. Holy shit, it's actually working like that. But here comes, guys, here comes. Now the only key thing that I was lagging when I was trying to formulate this strategy was the fact that I was not pricing in volatilities that are greater than 4 to 5%, guys, which simply means that my strategy, my quant strategy, is not going to work out if the market gets volatile by more than 5%. So yes, guys, yesterday was, let's just say, a couple of failures on my own trading as well, because I did not price in the volatility perfectly fine, guys. So these things do happen, right? But on and upwards we go. These things are not going to stop us, guys. These things will happen, right? You always have to sharpen your edge. Nobody's going to be right every fucking time. A lot of market participants who are actually coming out profitable every single time have the ability to flow like water, guys. They have the ability to flow like water. They do not join the bear and the bull gang as a whole. You know what I'm talking about, guys. You know what I'm talking about right here. And hit that like if you have not done that already. With that said, let's jump into the technical analysis for the day, guys. Bitcoin was unable to set in a trend above the guppy top right here. This is something which we were simply very, very critical about, guys. We had a good looking candle closure on the 9th of February above the guppy, but the follow through candle, guys, this was a fucking volatile day if you remember, right? We had a crazy run to the downside all the way towards $43,000 and a simple leg up that took the price action all the way towards $45,000, literally happening in 2 hours, guys. Holy shit, that was crazy amount of volatility, right? But essentially the overall candle closure happened below the topside guppy indicator that simply told us that this trend is probably going to take a lot of time to set in a reversal from these levels. So it was pretty much clear that $44,000 is something that we failed to reclaim in the mid time frames as well. And let's just talk about the RSI signature as well. We did peak above 60. We had a good looking trend that was being established above 60 reads on the RSI with the potential attempt to simply close a good candle above the upper guppy band. Everything was looking fine, but there we go, guys. We simply had a closure, a bearish closure, a good looking spinning top coming from these levels right here, which had a clear-cut follow through yesterday itself, which was quite devastating, guys. We kind of broke down below 42,500 regions, which is going to act upon like a resistance in the small to mid time frames, guys. Now, what we are dealing with in the price action right here is the fact that we are getting into a severely range-bound situation once again, guys. Holy crap. Price action is going to be directionless once again. This is what we are looking forward to right now once again, guys. However, this is going to happen until you hold $41,000 for good, because if you lose this level to the downside, most likely a revisit to the range lows at $34,000 is going to be happening, guys. It's going to be most likely happening if you lose $41,000 on a closing basis at the downside. That is something which we are looking forward to. Now, let me bring your attention towards the true strength indicator, which is working like a magic, guys, to be honest with you. At least in this entire leg to the downside, if you combine this true strength indicator with the guppy indicator and the trend overall, most likely you're not going to go wrong, guys. What am I talking about right here? In the daily time frame, the time frame is daily right here, and the trend is to the downside. Most of the TSI bearish crosses have led $10,000 move to the downside on Bitcoin, guys. You can see that this TSI cross happened during your last week of December. Happy fucking New Year to everybody right here. Bitcoin opened a bearish New Year, guys. Holy shit, that was also crazy. So right before the New Year, you had a TSI bearish cross that extended the price action all the way down towards your 40,000, guys. Rejection came in at 50,000. Price action landed at $40,000. You had a $10,000 range to cover to the downside with the TSI bearish cross happening on these levels right here. Another time, guys, the TSI crossed over bearishly once again at 43,000 regions, and that took the price action down all the way towards $33,000, guys. Another $10,000 move that happened towards the downside of the range, guys. So we are looking at similar situation happening right here. We're looking at a fresh new TSI bearish cross that literally confirmed yesterday itself. That gives a lot of conviction to the bears, to be honest with you. This is going to be giving a lot of conviction to all the people who are simply in the selling trend as a whole. The people who are simply with the trend on the sell side, with the daily time frame being bearish, are going to be the beneficiaries of this entire trend once again, most likely, guys, because the data is telling us that, right? The TSI has gone bearish right here, and if you lose $41,000, there's going to be a clear-cut confirmation that at least we're going to be testing this grind line right here, but most likely the resolution is going to be coming to the downside if you lose $41,000 once again. That could be quite disappointing, honestly, guys. That simply could be really disappointing. Bearish TSI cross from these levels is probably going to put Bitcoin once again $10,000 below the rejection price point at $44,000 flat. So is this TSI bearish cross going to lead into another $10,000 Bitcoin down move? Potentially, guys. Potentially, that is something which you're looking forward to in the coming week as a whole. And until we are establishing a good looking trend above $44,000, you can see that the edge lies towards the bears in the market, guys. So as traders, volatility is our friend. But if you don't know how to make use of it, and if you stand in front of the opposite side of volatility, you're going to get hit right on the fucking face, right? And the market is going to get the best of you. All right, so let's talk about Ethereum, which is kind of sad, guys. Ethereum's price action is kind of sad. Now, three things are playing out in this price action right here towards the bearish end as a whole. The first and the foremost thing is that the overall trend is bearish, guys. We had a rejection coming from this entire trend line, which was already under formulation ever since the last week of November. We're talking about a trend line that is fucking 3 months long as a whole. We had this interaction right at $3,300 flat, got rejected. We're kind of confirming this one to the downside, right? Now, forget about the trend line, guys. What are we getting rejected from on these levels? The upper guppy band, right? We're going to get it rejected from the upper side of the guppy band on $3,300 once again. So that's another confluence. Now let's talk about the third confluence, the third bearish piece of information on this price action. It's going to be the fact that we are dealing with massive hidden bearish divergence on the daily time frame, guys. Just take a look at this price point right here. We got rejected from $34 $400 flat. The RSI was at 40 reads, right? And with this leg to the upside, the RSI kind of established above 60 reads, but now it is kind of getting rejected. It's getting into a non-trading environment once again. So what this means is that we are dealing with a massive hidden bearish divergence in the market, guys, which is kind of playing out to the downside as of now, right? So what is Ethereum hanging on to right now? This stupid little grind line, guys. And you know that these grind lines, they do break down and they lead into crazy destructions in price action, guys. We've been dealing with this price action ever since this entire range, and ever since this stupid goddamn range started, to be honest with you. So this breakdown led the price action going down by 15% down move in the market. Now another downtrend that happened with a grind breakdown situation was right here, which was kind of bad, but well, to be honest with you, a good looking 10 to 12% range that you could capitalize on. Another down move was a good looking grind line on the small time frames that kind of broke down the price action below key levels, and that was another 20% leg that you could have capitalized on. And one more time, guys, holy fucking shit, you can't simply get rid of these grind breakdowns. This breakdown led the price action going below $3,000 for good, and that accelerated all the way towards the lower 2000 regions, guys. That's also crazy, right? We're looking at another grind line happening onto these levels right here. So benefit of the doubt in the small time frames, because we could be bouncing from these levels and we are in a weekend, guys. I'm not going to trust any price action that happens during a weekend. What am I going to miss out on? 5-10% range? But let's just say, guys, when the weekly candle opens and then we have a clear-cut direction in the market for good, we're going to be having better opportunities to simply capitalize on, guys. So let's just say that Saturday and Sunday is going to be no trading, guys. It's simply going to be no trading, right? We're going to be taking a simple day off altogether. It's going to be no trading because the market is simply directionless. That is happening during a weekend. That is something that can kill you. Fucking chop market, guys, something that happens during a weekend, right? All right, so before I end this video right here, I'm going to be talking about a psychological aspect that a lot of people go through when they're beginning their trading. It's called the victim game, guys. The fucking victim game. So just tell me that if you have gone through this feeling in the market when you have a crazy losing streak, when most of the trades are simply going against you in the market, when most of your gains that you simply had in the previous week are getting cancelled out this week right here. So what starts happening in your brains is that you start victimizing yourself. You're like, oh my goodness, I got into the fucking manipulation that whales were doing in the market, so I simply lost all the money. So what you're doing is you're simply putting yourself into a victim's foot, and then you're putting all the blame into yourself, and that is how you're fucking attracting crazy fucking shitloads of negativity in your trading environment as a whole. That is something which is killing you big time, guys. This is a big psychological factor that you have to simply get over with. I was in this fucking victim game for one whole year where I was simply talking about that how whales are manipulating my positions in the market and I'm losing money every single day. Whatever I try to do, I cannot make money in the market. And oh my goodness, guys, it was a clear-cut struggle for me to get rid of that victim game. So if you think that you're in that direction, just get rid of that situation right here, right now. Just start practicing on that. Get rid of that victim mentality for good. Guys, look, it kind of takes some time, but once you do understand that it's all about you, your comfort zone and your edge and your systems in the market, you will realize that this entire victim game is something that will certainly pull you back if you proceed with your trading as a whole, right? And I hope that helps. If that helps, you know what to do, guys. Hit that like and bell icon as well. Hit that bell icon as well, because we got crazy updates coming on the next week itself, guys. Crazy amount of price actions to be capitalized on as well. So we'll talk about crazy things the next week. Until then, bye for now.